Good evening. Today is Monday, January 27th, 2025. Update for Tuesday, the 28th. All right, let's go. Well, obviously, we stopped out the NBIS better than a poke in the eye, I suppose. Obviously, we were hoping, I know hope, but we were hoping to ride the trend. The good news is, one thing I was thinking today when I woke up and saw the futures down tremendously, triple digits, is that there really hasn't been a whole lot offered by the database, and that's very fortunate. And not that you won't always get long a boatload of stocks and get whacked, but the good news is there really just hasn't been a lot to do out there given the nature of the market. So that's one silver lining, is we didn't have a whole lot happening. A-Lab obviously imploded and luckily did not trigger an entry, so that'll be this week's lessons for the weekend charts. This week's lesson for the weekend charts on waiting for entries. Anyway, I like this KGS. Not that I'm crazy about energies, but it is kind of a textbook TKO. And a lot of times when you have a situation like that, they either trigger or they don't. And I'll flesh that out in just one second. Before I get to that, here's the NBIS. Obviously gapping lower and continuing lower. Obviously a bit of a bummer, but at least we got something. Something's better than nothing, right? Anyway, take a look at the KGS. So this is what I call a textbook TKO, and that's when it starts at one end and ends nearly at the other, poor close at least. And then it's got to go all the way back up to trigger. If it goes all the way back up to trigger, then you might have a bona fide resumption of trend on your hands. If it continues to implode, obviously, the no capital gets put in harm's way. So I like this one. Not that I necessarily like the oil stocks right now, but on an individual setup basis, I do like this one. A couple of shorts, I don't think we should go after those. Let's get to the overall market. There's a lot I want to flesh out. It's kind of fascinating. Some areas actually went up today, which is kind of hard to believe. S&P 500, well off its worst levels. I wouldn't call it a victory, though. Still down 1.5% thereabouts for the day. It's not the end of the world just yet. Let me get the moving averages in. So you can see we came right back into this base. Of course, one big update would have to be the mother of all updates, but that would put us back toward those new highs, and that would obviously be a good thing. I wouldn't get too panicky just about this one day for now, but as usual with trend trading, it could always be the start of something bigger. But for now, I think we're okay. Let's take a look at the NASDAQ. NASDAQ got whacked fairly hard. A little bit different story here. It doesn't look quite as good as the piece, but we're just kind of back into the soup, like I said, in the market in a minute right now. Net price change hasn't changed much in quite some time, so that's a little bit of a concern. Again, one or two big updates would get us back above these moving averages and make things look a lot better. But in the meantime, here comes, take things one day at a time. Rusty's not as bad as you would think it would be, given the nature of the trend. It was mostly big tech that got really creamed today. You can see, though, Rusty's still down 1% nonetheless, back toward these bow tie moving averages. It's stuck between the 50 in the 20. Some areas, like I said earlier, actually went higher. This is medical devices actually breaking out to new highs, so maybe we'll see some setups here fairly soon. Let's take a look at some other areas. Semiconductors, obviously, the elephant in the room, getting absolutely clocked today. Now, this is a bummer because we dropped all the way back below this prior base. Now, they did end a little off their worst levels, but not enough to get excited about. And again, one or two big updates here would certainly put you well back into the base and back into the sideways basing action. But let's not get too excited there, obviously, until unless that happened. Financials, none of those areas actually ended higher today. So this is kind of a glimmer of hope when you see a market where the baby doesn't get thrown out with the bathwater, or at least some sectors rally. That's obviously a good thing. Health services also pretty good day there too. They've been in a downtrend, as you know, but now they're starting to go straight up. So maybe these guys will bottom out. We might just start seeing some bow ties here. So that would obviously be a good thing. Major drugs also rallying nicely in here. So maybe we're just going to see a big sector rotation. Ideally, you know me, I sure like the semis to join in with the overall market and have them both head, obviously, in the same direction. There's the Qs. You can see a little bit of an opening gap reversal there off its best levels, though, so that's obviously a bit of a bummer. For now, I think we're back to a one day at a time environment, and let's just see how things shake out. Here's the energies on a relative strength basis. I suppose they look okay. Let's not get too excited about those guys just yet. But again, sometimes, as you know, we'll take things on an individual setup basis if we like the setup. In this case, with the KGS, it probably won't trigger, and if it does, that means that we have the mother of all comebacks. So sit tight for now. Let's just see how this shakes out. I don't necessarily think it's the beginning of the end, but again, you know the routine. Take things one day at a time. Everybody have a fantastic night. If you have any questions, you know the routine. Thank you so much.